We've seen some interesting moves in the euro-dollar pair over the course of the last couple of weeks, initially sparked by an acceleration to the downside. This is a pair that had already been trending in a downward channel. So what we were really looking for at the time was to see any signs of momentum loss and potential correction to follow. But instead, what we actually saw was an acceleration to the downside, a breakthrough the bottom of the descending channel as we saw appetite for the dollar continue to rise. Now, what we've seen since is the pair has bottomed out, and I think we've got a couple of factors which we have to pay attention to here in terms of the global risk appetite in the market and also expectations as far as the European Central Bank and the Federal Reserve are concerned. But from a purely technical standpoint, as you can see from the chart, for example, we did see quite an aggressive bounce off of those lows. The question is this a sustainable bounce? Are we going to see a deeper correction? Are we even going to see a break higher and a broader correction of the longer term downtrend, which would be quite a significant move to the upside? Or is this just a dead cat bounce? Are we just seeing a brief rebound and a continuation of the downward trend? Is the dollar going to remain in favor in the longer term, which it has been across many different currency pairs for quite some time now, and especially given the hawkish turn that we saw from the Federal Reserve, for example, this week, with Jerome Powell effectively deciding to retire the word transitory, effectively say that inflation has become more ingrained. It's become a bigger concern as far as the central bank is concerned, and also talking up the possibility of faster tapering. Could this lend itself to further dollar strength if we do see them follow through this in 2 weeks? Of course, there's considerable uncertainty about what the Federal Reserve and other central banks will do in the near term because of the new variant Omicron, which was first spotted in South Africa, but we've now seen pop up in various countries around the world, including here in the UK and over in the US. So this is one area of incredible uncertainty, which almost made Jerome Powell's comments this week quite strange in terms of the timing, like this had been planned for weeks, and he decided not to be deterred by this new outbreak, which could ultimately have a big bearing on what central banks do. But this is the turn that it's been taking. So if the Fed follows through with this in December, we could potentially see further dollar strength, as it would suggest that an acceleration in the tightening process from the central bank, even amidst all of this uncertainty. But as I say, the technicals are quite interesting. If we take a look at the chart, you can see that we're now starting to run in some resistance around the bottom of that descending channel. That also coincides with a 38.2% retracement around 138 of those recent late October highs to the November lows. If we can push above here, we can see a deeper correction. 143.40 is an interesting level. It's the 50 fib. It's one I always pay attention to, but I think the key one here is going to be 115. Now, this is where you've got the 61.8 fib level. We've got the prior area of support going back to October, possibly forming around the top of that descending channel this time, and the 55-89 day simple moving average bands. That's a massive area of resistance as far as I'm concerned. If we can see price gravitate towards there ahead of the Fed meeting, then we could potentially see some selling pressure coming in if we do get the hawkish Fed that Jerome Powell appears to have laid the groundwork for. But 2 weeks until the Fed meeting, it's a long time when we're waiting on variant news, when we're trying to find out if it's vaccine resistant, how transmissible it is, and also obviously how bad it is in terms of how much hospitalizations and fatalities it leads to. All of these things are still yet to be fully known. So the data will dictate ultimately what the central bank does. But if the Fed does become more hawkish and they have much less wiggle room than the ECB does, then we could potentially see the dollar strength return later on this month, which could weigh on this currency pair once more. If we do see a deep enough correction, we do see the sellers come pile back in, and the key is going to be at what point do they come back in, if they're going to come back in, or has this pair bottomed out over the medium to longer term.